Good morning, good afternoon, good evening, guys, and welcome to another of the Darwin Trader. My name is Daniel, and today, guys, we're doing a little review on Churchill Capital Corporation 5, ticker symbol CCIV. This is a SPAC merger. This is a company that's been talked about quite a lot this year, especially in the last couple of months. And this is actually a SPAC merger with one of the biggest, or soon to be biggest, EV brands of the century, and that is Lucid Motors. So Lucid Motors is a company actually that I've done a review on quite a few months back, actually before any of this talk, and I always said that I was interested in Lucid Motors as a company if they ever came out and IPO'd, and it just so happened they went to do a SPAC merge. So yeah. It's a company that I don't currently have in my portfolio. Okay, it's not a company that I don't have. Having said that, I'm doing a review on this because it's a big shout out to Sohu, who won the competition, and his prize is he wanted me to do a review on Churchill Capital Corporation. So this is why I'm doing this today. Now, I will say that I do not have any shares in this company, okay, but it's not to say that I will be invested in this company in the future. And I'll tell you a few reasons why I'm not currently invested in this company, but I could be, okay. So we're going to go in and have a look a little bit about the company, see what it's all about, okay, and then we'll finish up on the end with a little bit of technical analysis, a bit of price action to see where we're heading with this company. So first things first, this company has a market cap of 4.642 billion. Okay, so massive. Price at the moment is just short of $18. Okay, this is actually very low compared to its highs. So its highs saw around about $62 at one point. So it really has had a significant drop ever since then. So yeah, prices at the moment are actually quite appealing. So again, we'll leave prices towards the end, but just a little bit of a hint, good price to be getting in if you're looking to invest in this company. So Lucid, really, people talk about it as being the next Tesla, and I don't look at it as being the next Tesla. I look at it as being I think I mentioned this back in my video a few months back. I look at it as a premium, okay, a premium car, and I think there's room for premium cars. It's pretty much like we have in the motor industry, right? Until now, we've had a Ferrari. There's always been room for a Ferrari. There's always been clients or niche for a Peugeot or a Lamborghini. There's always been a market, and I think Lucid Motors is really I'm not saying that Tesla does have premium cars, they obviously do, but I think Lucid is sort of going that one step a little bit higher in terms of the feel, the premium feel, and it's all very well reflected on the price tags of these cars. So these cars are released 70,000 minimum upwards per car, so it is a hefty price tag. And having said that, there is pre-orders. In fact, if we have a look, I believe there's a pre-order here of around about, here we are, 9,000 reservations. So they already have 9,000 reservations, which actually anticipates a $800 million sales in a year. Okay, so really big numbers there. So massive, really exciting. Now the company itself has many positive things. One of the biggest things is its CEO. Okay, its CEO actually used to be the chief engineer of Tesla, so that's to say a lot. So he's actually a Brit, and he has a lot of experience in the industry. So yeah, so he has helped move this company forward to where it is now. The company the only thing about this company that you wouldn't see compared to the others is they don't have any current sales. Okay, so we do have pre-orders, but they're really taking baby steps now. They're really in the infancy stage of growth, which that means it probably is a good time to be getting in now, right? At this sort of these prices. If you bear in mind that you have your Neos at the market cap they are at now around about between $35 and $40. You have Tesla, which has just actually dropped down under $600, and you've got this company at $18. So looking at the market cap, you can see where this company is going in the future. So you could see it 20x, 30x in the next few years if everything goes really well. Now the company's come down for some really highs, from real highs, around about $64. So we're just under $18 now. So yeah, so this actually put a lot of people off with the price, the drop. But that's not to say that we have a good prices to be getting in at the moment. Now, one of the most unfortunate things that happened, there was a lot of talks about this at the beginning of the year, so January time, when the market was actually booming, we had all-time highs, stocks were rising. Now, when they came out and announced the merger, it was actually quite bad timing. There was a bad timing because we started to see a decline, a bearish move on the market, which probably wasn't the best time for an announcement. But again, we can never predict that, right? That's the way it works. Now, there's also been a lot of shorting on SPACs companies. So one of the ones that's been hit is this company. So I don't think there's been an exception to that rule. They've all been pretty hit, pretty bad. But it's still to say, it's not to say that it's not a good investment for the future. Now, there's one thing that was supposed to be announced as the actual merger date, and that's actually been pushed off until the third quarter of 2021. So that was announced on a couple of days ago, on the 14th of May. So we'll see how the market reacts this week, because there could be a decrease in price over the next week. So looking at the price, we're at $18. So we could see prices go right back to the pipe price, which was actually at $15. So the good thing, obviously, is this car. It does have technology. It does have a good, real good product. Okay. Having said that, unlike, and this is no better said, as they don't have any sales, they're very much behind, for example, other companies such as Tesla. So in this case, the rollout for the future is what's worrying. So there's a little bit of a summary here on Seeking Alpha. So unlike Tesla, Lucid Motors will face a different competitive landscape that will be much harder to penetrate. In addition to competing with 100 other of EV startups for market share, Lucid will also be required to secure valuable materials to prevent delayed deliveries. Okay, since Lucid doesn't have any experience in scaling its production, there's a risk that the company will not be able to meet its sales estimates in the following years. Now, so that's probably one of the worrying things, is actually scaling. And I think scaling, producing, for example, I know they're very much behind other companies such as NIO and Tesla at the moment, but that is really a key question. Now, that's a real key. How can they scale? Will they be able to produce these pre-orders? Because these cars that have been pre-ordered, if they're not produced, it's going to put a lot of pressure on the company. So I'm assuming that they are capable of producing at least these 9,000 pre-orders that they have. So scaling is the issue. We know other companies in the EV market have making sales and are increasing year on year or quarter after quarter, whether it be Tesla, whether it be NIO, and this company has yet to prove that. So this is really, like I said, in the early days. So that would be a key component, I think, for a lot of investors to be able to get on to invest in this company, to see how they can go. So the company has actually set some really high objectives, and I think this is probably what's a bit worrying, where they can scale that fast. So they actually project to revenue by 2022 only 2.22 billion. Okay, but it plans to increase its annual revenue of 22.76 billion in 2026. Okay, so that's a tenfold in a matter of 4 years, and that's really optimistic, should we say. Whether they can do it or not remains the question. Okay, this really remains the question, and again, we need to see this before we really get investors on board on these early stages. Quite a good point here is because these pre-orders that have been made, so this could be a reservation between $1,000 and $7,500, are actually fully refundable. So there's no guarantee that those sales projections will be close to reality. Okay, so that's very important to note. So that people could pull out and say, right, no, I don't want to invest, and then those sales numbers probably could change. Now, in terms of price, we've had a downtrend. If we have a look back here, back in February, this is when we had the real highs. Okay, so we had these big highs, which you just saw, $64, and then we had a drop, a real big drop, just in a matter of no time, right down to the beginning of March, around about these levels here. So yeah, so the levels we were back at in March, we did start to see an increase of buyers coming in, and then we've started to follow this downtrend. Okay, this downtrend, which looks like a wedge here. So it's been hitting this support level here. So we have a support level, and there's a resistance level. That's what we're looking out for. So this is really the key to see where, if you're looking to invest in this company, you can use these support resistance lines, know whether you're going to get into the company or not. Now, if you're looking for the long term, it's a risk. Okay, like I said, bear in mind that this company, is not producing numbers. They do not have anything in the pipeline like Neo are producing. For example, Tesla are producing. You know, they're solid companies that are growing and they're producing products. This company is not at the moment. Okay, and this is what needs to be seen. Now, price, in terms of price, if we have a look at the current price, we're at the moment, we're actually below all the simple moving averages, okay, so which would suggest we still have a little bit of room to go to the upside, okay, so the upside, I would say around about this level here, which is quite a good support level, which is around about 23, yeah, around about $23. And then at the same time, in terms of the downtrend, we could have a downtrend, and I would say round about this level here, which is around about $15 mark. So is there still room to go down? Yeah, probably. Is this a good price to be buying in at? It's completely, to be honest with you, if you believe in this company for the long term, this could be a very good price. This could be a company that give you 40x in the next 5 to 10 years. So really the summary is, for me to be able to invest in this company, and it's not only about price action, I do need to see numbers. I think the price at this moment, I don't want to speculate. For me to get into the EV market, really, because there's so many out there, and there's a big risk in a lot of them, I need to start to see numbers first. When the moment I start to see results being produced, okay, that's probably the time I will be investing in the company. Okay, so for those of you that otherwise don't think that, and you want to get into the company and you believe in this company for the long term, and that's what your true conviction is, I think pricing at the moment is quite a good price. It's quite a good price to get in at the moment. Like I said, I still think there's still room for a drop. If you're looking to buy in, probably can wait for it to go down to probably $15. Let's see what happens during this week. Having said that, this is a company that I will be having on my radar for the future, so I'll be keeping an eye on results and price action. And yeah, so let me know what you think in the comments down below, guys. Guys, thank you for watching. Remember, hit that like button, that really helps my channel grow. And if you're new to the channel, hit that subscribe button to see more videos like this. Guys, thank you for watching, take care, and speak to you soon. Bye bye now.